Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
2020 was a difficult year for us all. World economies have crashed. Financial markets showed us again how important it is to be aware of the global economy. And, believe it or not, many people have profited from the movements in the markets. This December, we bring you the biggest open source webinar series for beginner traders to help each and every one of you understand the basics of online trading and investments from industry experts. Learn from the CEOs is the biggest webinar series organized by InstructFX with the extraordinary participation of 5 CEOs of 5 top Forex companies worldwide. Join us live on Monday, the 14th of December at 1700 GMT for the grand opening with an amazing webinar on trading currency pairs with Joao Monteiro, CEO at Forex. On Tuesday, the 15th of December, trading stocks and indices is the topic of the day with Phil Adler, CEO at ETX Capital, straight from the heart of London. Wednesday, the 16th, the week only gets better with Joe Rundle, CEO at Markets.com for an amazing webinar on trading commodities. Just when you thought that things can't get any better, on Thursday, the 17th, we have the cryptocurrencies trading webinar with our surprise guest. Finally, on Friday the 18th, it's your time to shine in the Fidelity Gala Awards, where InstructFX is rewarding you for watching us live with amazing prizes. Join the biggest open source webinar of 2020 and learn what most Forex brokers don't want you to know from 5 reputable CEOs. Click on the link below and reserve your seat for the biggest open source webinar of 2020, hosted by yours truly, Andrew, the Chart Whisperer. Learn, observe, trade with InstructFX.
Boom, and we're live. What's happening, people? Good morning, America, and welcome everyone to our live stream. Happy Monday once again, everyone. How you guys doing? Type your comments. Let me know how you're doing. Let me know how your weekend was. We're only 2.5 hours away, 3 hours away from the start of the biggest webinar series of 2020 organized by InstructFX, guys. Today at 1700 hours GMT, we start the marathon week with the first webinar. Trading Forex is the topic with Joao Monteiro, founder and CEO at Forex. You can find the link in the description down below, guys, if you want to book your VIP seat for the biggest open source webinars of 2020 organized by InstructFX. And by booking your VIP seat, you will be automatically sent to the gala where we offer amazing prizes. The gala will happen on Friday, guys. Also, this week, we won't be doing the usual European opening sessions anymore. This week, we will start with the U.S. markets open at 2:30 GMT, like now, and continue with the hottest webinar series of the year. Now, let's get down to business and see what's happening in the markets today. 14th of December, 2020. Germany enters hard lockdown from Wednesday until January 10th, 2021, as COVID cases rise. London is likely to announce more restrictions as well, as one of the world's richest cities struggles to contain the virus. More details on December 16th, guys. U.S. stocks aim to higher opening today on stimulus measures positivity. Crude Oil Futures consolidate above the $50 mark for the first time since March, and Bitcoin is still quiet, just above $19,000. And in case you missed the announcement, guys, in just 2.5 hours from now, we start the biggest open source webinar series of 2020, organized by InstructFX with Joao Monteiro, CEO at Forex for the grand opening. Don't miss out. Again, the link is in the description down below, guys. Like, share, subscribe, and support us in delivering more great content. You want more news? I have more news for you guys. Guess what? Neil Wilson, Chief Market Analyst at Markets.com, will join us shortly for a new round of Market Talks. This show is proudly sponsored by our partners at Markets.com. U.S. Markets Open coming up. Right. Good morning, America. Once again, good afternoon, Europe, and welcome to the U.S. trading session. We are just a few minutes ahead of the U.S. trading session, but we're going to start with a breaking news, guys, which came in a few minutes ago. London likely to move into toughest tier of COVID-19 restrictions, said by BBC. Let's see what is happening. London is likely to be placed into the toughest tier of COVID-19 restrictions following a sharp rise in COVID infection rates. The BBC reported today as one of the world's richest cities struggles to contain the disease. Earlier this month, the government implemented the three-tier system of restrictions in England to try to keep a second wave of the virus under control following a month-long lockdown. More than 40% of citizens were placed in the highest risk category. However, the capital, whose 9 million people and world-leading financial center make it the engine of the British economy, is currently only in the second highest tier of restrictions. A countrywide review of the tier system is scheduled to take place on December 16, 2 days from now. Although London Mayor Sadiq Khan said it was possible a decision on London could come as early as Monday. We saw Germany, guys, we saw Angela Merkel imposing a hard lockdown on Germany. Hopefully this is a wake-up call to all the other European countries that did not have tight restriction measures. You can see the result, guys. You can see what is going on. Let's move on with the article. Now, Health Secretary Matt Hancock was due to speak in the Parliament at 3:30 GMT, which is 2 hours from now, 1 hour from now. The main difference between the top two tiers is that the bars and restaurants, which can stay open under certain conditions in Tier 2, must close their doors in Tier 3 and can only operate takeaway services. There are also additional restrictions on socializing, but workplaces and schools are told to remain open. Data published last week showed the cases rates per 100,000 people in London stood at 191.8, putting the city ahead of regions that have stricter rules in place, such as West Midlands. Based on that data, the government raised concerns about the spread of the virus in London schools and announced a program of mass testing. Yesterday, one region of the capital unilaterally decided to close its schools altogether. Well done, Germany. Well done, London, well done, United Kingdom, for imposing restrictions when you have to. Now, let's have a quick look at top 5 things to know in the markets today, guys. And then we will have Neil Wilson joining us from the heart of London for an amazing round of market talks. Number 1 on the board, the stimulus push enters a crucial phase. The stimulus measures that we're expecting for over a month now, and so are the U.S. companies. The bipartisan push for a streamlined fiscal stimulus package inched forward over the weekend, with his backers reportedly preparing to break out the most contentious parts in order to allow the passage of urgent relief for small businesses and the unemployed. According to various reports, the bipartisan group that crafted a $908 billion package is planning to strip out both provisions about liability protections for businesses and $160 billion in aid earmarked for state and local governments. That would allow $300 billion to be distributed in the form of $300 weekly employment benefits and another $300 billion for small businesses, with a remainder allocated to healthcare providers and other entities. Let's move on to number 2 on the board, guys. UK assets rebound as Brexit talks revive. Right, let's see how alive the Brexit talks are this time. The pound rebounded after the UK and European Union agreed to extend their negotiations on the post-Brexit free trade agreement, yet again after missing the latest self-imposed deadline yesterday. By 6:30 a.m. Eastern Time, sterling was up 1.5% against the dollar at 134.28 and up 1.2% against the euro at 110.49. The FTSE 100 was up 0.4% and the more domestic focused FTSE 250 up 1.4%. While UK government bond yields rose on a slight move back to a more risk-on posture. Now, number 3 on the board, stocks set to open higher on stimulus hopes. U.S. stock markets are set to open higher later on renewed hopes that some form of stimulus bill will pass through Congress before the end of the week when the government spending authority is set to expire. At 6:30 a.m. Eastern Time, Dow Jones futures were up 244 points or 0.8%, while the S&P 500 futures were up 0.7%, and NASDAQ was also up 0.5%. Cash markets had an open mixed day on Friday, with the S&P and NASDAQ both ending down. Number 4 on the board, guys. AstraZeneca moves on Alexion. AstraZeneca agreed to buy Alexion, a specialist in drugs treating rare blood disorders, in a cash and stock deal worth $39 billion, the biggest deal in life sciences this year. Astra's share price fell around 5% in London this morning on fears that the price, which already offers 43% premium to Alexion's average price over the last month, may end up being even higher if a rival bidder emerges. And the last but not the least, and then we're going to welcome Neil Wilson. Number 5 on the board, oil trading higher on Saudi blast OPEC report eyed. The Organization of Petroleum Exporting Countries will release its monthly report on the world oil market as crude oil futures consolidate above $50 a barrel for the first time since the pandemic erupted, since March. By 6:30 a.m., Brent crude futures were up 1.3% at $50.64 a barrel, while the U.S. crude futures were up 1.3% at $47.17 a barrel. Geopolitical concerns were partly behind the strong tone overnight. A tanker unloading at the Saudi Arabian port of Jeddah was struck by an explosion from an yet unidentified source, the latest in the series of attacks of Saudi installations. Right. This being said, guys, let's do something. Let's take 30 seconds and then welcome Neil Wilson from the heart of London, Chief Market Analyst at Markets.com. We're coming back live in 30 seconds, guys. Stay tuned.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips.
Right, guys, and as promised, let's welcome Neil Wilson straight from the heart of London. Neil, very good afternoon. How are you doing?
Hey, Andrew. Yes, I'm very well, thanks. Yeah.
Happy Monday, by the way, if there is such a thing.
We're nearly at Christmas.
Now, I wanted to, what are we? 1 week away from Christmas.
Yeah, it
Sweet.
should be a nice, interesting run into to the year end with Brexit still
dragging.
resolved.
Yes, I was sure that will be the situation, but we're going to dive into it in just a second. Now, we saw today Germany announcing lockdown, and London announcing that they might follow shortly. What's the situation in London right now?
Yeah, so it looks like London's going to be into tier 3, and tier 3 essentially, is basically a lockdown. Tier 2, as it currently is a lot looser. You can, pubs can open and restaurants can be open and non-essential shops and so on. It's going to be a bit of a hit to the London economy, but I don't think, as far as the markets are concerned, they're really looking beyond, they're not really looking at what's happening over the next week, 2 weeks, 3 weeks. They're looking at the vaccines and the rollout of those, and where we're going to be in sort of 6 months, 9 months, 12 months time.
Correct. Did the vaccination process start in UK already?
Yeah, we were the first country to launch it. Of course, it's just kicking in the US as well. As it seems to be, the US, UK, maybe one or two other countries are going to be, you know, in pretty good shape within the next few weeks, really. Because I mean, if you look at the sort of data around who's hospitalised by this, it's very much just quite a small cohort of people in, you know, the most elderly, and with them being vaccinated over the coming weeks, we could see a significant drop off in hospitalizations, and that could allow for a loosening of restrictions a lot quicker than maybe many people think right now. You know, a lot of talk about the spring being almost back to normal, but it could be sooner than that.
Yeah, I saw that many countries are welcoming people that got vaccinated or that they had COVID previously, because their body seems to be doing much better, and they hope they're going to give it to the other people, this immunity. Now, let's talk about the pound today, Neil. Last week, we saw Boris Johnson announcing the population to get ready for a potential no-deal Brexit. Yesterday, UK and EU both extended the self-imposed deadline. Is the deal hanging on the fishing rights? Do the fishing rights weigh so heavily to a deal?
I think those are a political issue. It's you know, Boris Johnson and the British government don't want to be seen to sell out the UK fishermen, because it's been such a sort of emotional argument, I think, as much as anything. I don't think, you know, when it comes down to the sort of brass tacks of it all, that fishing is really going to be the stumbling block. I think probably the biggest stumbling block is still over the level playing field and the EU insistence on the UK maintaining regulations and the regulatory landscape in line with the EU, which, of course, if the UK wants to be a sovereign nation, it can't really agree to. So, yeah, still some sticking points, and still, you know, a bit of progress. As you said, the gap higher on the open last night for sterling, and it's holding those gains at the moment, but you know, it's going to be exposed to a lot of negative headline risk over the next couple of days, because we probably won't get progress by Wednesday. Say, you know, they're talking about, I mean, basically still negotiating right up until Christmas.
Yeah.
So I think you could see the market just becoming a bit unnerved. If there is no progress over the next sort of 48 hours, no real progress, then you could see it just trip back to the sort of the bottom of the range at that sort of 132 level.
Talking about that, let's have a quick look at the pound on a weekly chart, and let's see what is happening with the pound and what's the best case and the worst case scenario for the pound in the near future. What do you say? Are you up for it?
Yes. Yeah. I mean, I think you know, you're probably going to struggle to achieve one sort of 145, 147. As an initial thing, that might be towards the end of 2021 as the dollar continues to weaken. But I think 140 would be possible as an initial kind of reaction to this. I think, because also what you've got to look at is not just always a lot of Brexit risks priced into sterling and cable, but I think the weaker dollar, I think we continue to see the dollar softening. And as that happens, you know, that will just give cable a little bit of a lift as well on that dollar side, and so you maybe see 140 off the back of a deal. If there's some kind of fudge transition, very thin deal, continuing to talk on certain issues, and you know, a kind of a non-deal deal, then it probably wouldn't go that high. It'd probably be stuck around 135, and then I think you know, you're looking at 120 if there's a sort of a cliff edge no deal.
Exactly, that's what I wanted to say. Exactly. Let's have a quick look at the pound. This is the chart. You can see the chart, yeah?
Yes, I need to lean it closer to my screen, but yeah.
All right. This is the pound's performance since beginning of the year. Yeah, so we saw when COVID hit, we see two red candlesticks pushing the pound all the way down to 114.35. After that, the pound started recovering, started the uptrend. It settled above the 200 moving average on a weekly chart. And to be honest, now it's trading a bit higher than where it was in January at the beginning of the year. And if you look at the 50 and the 200 MA, we might see a gold cross being formed there, which potentially will shoot the price somewhere towards the 139, 140 that you mentioned earlier on. But that's in a good scenario. In a bad scenario, what are we expecting? What did you say, 120?
Yeah, I think you could see an initial reaction towards 120, and then maybe settling around 125. I sort of work on the basis that markets they always tend to overshoot, on the upside or the downside, depending on what's going on. So I think, you see an overshoot lower to 120, that sort of level that we saw when it was a flash crash in 2016, October 2016 flash crash. That sort of area where there's a real uncertainty and people just completely unwinding their sterling positions. And I think these levels have been talked about, so these are the sort of levels that will be gravitated towards. But then I think, once no deal, if there is no deal, then problems for the UK economy, of course, near term. But I think you start to see the economy bounce because you're comparing it with this COVID year of 2020. Yeah. You actually start to see the economy improve just because of the pickup from vaccines, and then maybe cable just inches towards sort of 125, and then you got to remember that no deal is not an end state. You can come back to the table. They've got 97% of the deal on paper. They can come back to the table anytime. So I think you get an initial reaction quite sharply lower, picks up a bit higher again, kind of pairs some of those losses, and then you're looking at, do they come back to the table and try to renegotiate? And I don't particularly see a reason why those sides, either side, would not want to come back to the table after a no deal exit on the 31st. I think it'd be very disruptive, and they would like I say, it's not an end state. You can always come back to the table.
Yeah, true. And as you know, there's no pride in business. So I hope if we're going to get to that stage, they're going to leave the pride and just focus on business. Now, what do we do until then, Neil? Do we avoid trading the pound, or we just trade the news, trade the intraday?
Yeah, I think, at the moment, the pound's been chopping this range, and I think it's been quite a good one to probably play the range on this one, just because you've seen it seems to be topping out 134 and a bit, and then it seems to be held pretty nicely around 130, sort of 132, 133. So it's been moving around this range. I don't see it breaking out until there is an official announcement, or there's some sort of white smoke that comes from the talks, and then you get momentum pushing it out of that range. But until then, it seems to be chopping around this range. And I think this gap open, there's probably a fair bit of support on the gap, but I wouldn't be surprised if we see that fit. If, like I said, there's no good news over the next 2 days, that gap gets filled.
Yeah, I see the gap you're talking about. Correct. So careful, extra caution when you're trading the pound. Apparently, when you're trading the pound nowadays, trade the news goes better than technical analysis. Now, one last question. Why do you think, because we have the stimulus measures, in the US, which, fingers crossed, they will be approved and things will get back to normal. Why do you think it took US so long to agree or to approve the stimulus measures? Europe did it more or less immediately. What was the big problem for the US? The Congress, Donald Trump, the elections, or they try to keep the dollar subdued for some reason?
I think you got to put it down to the fact that it's so polarized in Washington right now. It has been for years. You had the election, so neither side really wanted to concede before the to compromise too much just before the election. Since the election, obviously, it's been it's still. We've not really had a resolution from the election in the Senate, and so the Senate is the key here. I think it's just the fact that the Senate is very, the Senate's Republican. It's just about Republican, just a small majority Republican. The House of Representatives is a Democrat majority, and that split between the two houses is really where the problem lies, and that's not really been resolved by the election. And so I think I think they've got to get over the line sooner or later.
Yeah.
The worry is though that they see these vaccines and they're thinking, well, we don't need any more stimulus now. But of course, this the federal unemployment benefits end on Boxing Day on the 26th. And so after that, what then happens to people? So I think they need to, clearly they need to do something to bridge that gap. And it seems to be that they're slowly but surely coming together. And this $908 billion bipartisan package probably has the best shot at getting over the line.
Yeah, and now that the elections have ended and it's official, Joe Biden is the new U.S. president. It's going to be made official today, if I'm not mistaken, today or tomorrow. The Congress meets to sign the thingy. Now, also, U.S. took an awful lot of time to approve the Pfizer vaccine. U.K. did it first. Once again, congratulations, U.K. First country in the world to approve the vaccine. Why on earth is it taking them so long?
Well, I mean, the US has managed to prove it. I guess a couple of weeks later, they had different processes, and I know there was some criticism of the UK for apparently rushing it, but a couple of weeks here and there is not going to make a huge amount of difference. The data's all there. The data from the trials is all there. So I think really is wonder why Europe's not trying to be a bit quicker on this in order to vaccinate its population. But we're talking a few weeks here really, and I think we're going to have mass vaccination programs being rolled out through the Western world, at least the developed world, through the first half of 2021, and to the point where we should have a sort of collective herd immunity, and all the vulnerable people are vaccinated, and life can go pretty much back to normal.
Yeah, and from March, let's say if they reopen the borders in Europe and people that got vaccinated or they had COVID, they're allowed to travel, then things will improve. Now, one more thing, and then I'll let you go. This week is the biggest week of InstructFX, the biggest open source webinar of 2020. And we're going to have Markets.com CEO Joe Randall on Wednesday for an amazing round of trading commodities. What's your take on that one? When was the last?
Good to see him in front of the camera for a change. But Joe. Joe is an ex-trader himself, a prop trader for one of the big banks years ago, before he took up the role here. So he very much knows what he's on about in terms of trading and strategies and so on. So he'll be a very good speaker, I'm sure.
I'm looking forward to that because I have some tricky questions I want to ask them, and I'm curious about the response. Right. So this is it for now. Very shy. We see the pound very, very shy. We don't know which way to go. It's more or less better to trade the news if you want to trade the pound nowadays. Let's hope for a positive outcome from the UK EU negotiations, and hopefully we're going to have a Brexit deal so I can come to UK and visit you. I still have to bring you that bottle of wine that I promised. All right. Right. Neil, thank you ever so much for being with us today. Very likely we're going to speak again on Thursday, as usual. One day after the interview I have with Joe Randall, with your CEO. That's going to be amazing. Right. Thank you so much for being with us today, Neil. I'll talk to you on Thursday. Have a good one. Right, guys, and now we're gonna take 30 seconds and then we're coming back live with the charts of the day. We're already 15-20 minutes into the US trading session. Let's see what is happening. We're coming back live in 30 seconds. All right. And we're back, guys. We are 20 minutes into the U.S. trading session. We can see crude oil, guys, dropping sharply after the open. $46.54 for crude oil. It passed that 50 moving average to the downside. It might target the 200 MA to the downside at 45.91, at least as things stand right now. RSI, stochastic, both turned around, pointing downwards, and they have plenty of room to go. So we might see crude oil futures dropping sharply, guys. We're moving on to Euro US dollar, the most traded currency pair in the world, which again started trading to the downside after the US markets opened 121.58 for Euro USD as things stand right now. Again, with the RSI and the stochastic turning around, pointing downwards, but still they're very, very close to the overbought levels. Overall, the euro had a good rally today. So it's about time for a correction. We might see it pulling back to that 20 moving average at 121.45, which is about more or less 20 points from the current market price. Moving on to the cable, guys, to the pound, GBP USD. Again, we saw a bit of a rally on the pound today, and in the last 3-4 hours, it started dropping 133.80 for the pound this afternoon after the US Open. We see the RSI stochastic turning around, pointing downwards. We might see a retest of that 200 MA at 133.43. Yeah, on the 60-minute chart. Moving on to USD JPY, the same US dollar that tanked today, that's been tanking for quite some time now. It started correcting in the last hour or so, probably. Even the USD got fed up of it going down the hill only, and it's making a correction. We might see a retest of that 200 moving average to the upside at 103.86. Yeah, currently USD JPY is trading at 103.72 with the RSI and the stochastic turning around from the oversold levels. So don't be surprised if we're going to see the US dollar pushing even higher and testing that 50 moving average at 103.99, at least as things stand right now. We're going to have a look at some trading signals in a minute, guys, and get some more confirmations from there. Moving on to the Aussie dollar, AUD USD pair, 0.7561 for the Aussie dollar after a fantastic rally that started on Friday. Very, very good rally for the Aussie dollar, which again started a correction with the RSI and the stochastic turning around, pointing downwards. We see a retest of that 20 MA as things stand right now. It might go even lower, guys. It might even test the 0.7536, which is where the 50 MA is. Anyway, let's see what's going to happen from there. Now, the US dollar, USD Cad, once again, for the first time in quite some time, guys, we saw the USD Cad not being able to create lower lows. It rebounded from the 127.19, currently trading at 127.41. It got a bit of a push, still below that 200 moving average. The RSI and the stochastic still in the oversold levels, turning around. It is a long shot, but it's not unusual if we're going to see a retest to the upside of that 200 moving average at 128.15, even though it hasn't happened for quite a while. Last time when it happened was here on the 30th of November. Okay, when we saw the price getting very close to that 200 moving average. Ever since, it was a million miles away. Let's have a look at the benchmarks, guys. The S&P 500 and the Dow Jones today. Positive opening for both of them, 369.367 for the S&P. We see a bit of a gap at the opening, indicating quite a bit of a buying power. RSI stochastic still pointing upwards. We might see a good rally for the S&P 500 today. Probably traders will set their first take profit targets at 3709.15 to the upside if they decide to go long on the S&P 500. Great news coming from US with that stimulus measure, guys. Come on, guys, give us a good news so we can see the S&P and the Dow creating higher highs and going through the roof. There we go. Talking about the roof. Dow Jones Industrial Average, $30,295.85 for DJ30. Positive opening. We can see the gap. Very, very good gap at the opening today. Who knows? Maybe they will resume that uptrend that stocks and indices usually do. RSI stochastic pushing higher to the oversold levels. They're just 1 inch away from the oversold levels. Let's see what's going to happen in the next few hours. Meanwhile, we're moving on to the US dollar index, guys, which, oh my God, tanked a lot today. Tanked very, very bad. We can see a negative opening on the Asian trading session. We can see a huge gap from where it left it on Friday, and it was tumbling the entire day. In the last hour or so, we see a green engulfing candlestick or that correction that I was telling you about. So far, we're looking at the US dollar index trading at $90.49. There is potential. There is a bit of potential to the upside. We might see testing that 20 MA at 90.64. And let's see, where do we take it from there? There is plenty of room to go. We're looking at the RSI and the stochastic trading way in the oversold levels, We might see it even testing that 50 MA, or who knows, why not? Even that 200 MA to the upside. We're going to have a look at some trading signals in a minute and see what's going on. Gold futures, on the other hand, guys, $1,837 for gold futures. We saw gold testing that 200 MA earlier on at 1841.89. The price got rejected. We see that green candlestick. We see that long spike that the green candlestick left behind it. Still, gold is subdued. Why is gold subdued? Because we see the US dollar index and gold moving in the same direction, guys. This is very rare when it happens. Usually gold and silver and the US dollar move in opposite directions. Yeah, gold with silver go up, the US dollar goes down. I don't know why they move in the same direction right now. I was expecting for gold to do a bit better, to be honest. But there you go. The markets take us by surprise most of the times. Moving on to Brent Oil Futures on a 60-minute chart, $49.91 for Brent Oil Futures after a sharp drop that happened in the last hour or so. We might see Brent Oil targeting that 49 flat, where that 200 moving average is, to the downside. RSI, stochastic, they both turned around, indicating a bit of selling power, a bit of uncertainty on Brent Oil Futures. They might trade lower. Let's see. Let's have a quick look at Bitcoin, guys. Everyone's favorite. Right, when everyone is doing bad, Bitcoin seems to be doing very well, guys. $19,231 for Bitcoin after it took a breather in the last few trading sessions. It finally settled somewhere above the 19,000 mark, leaving us only $700 and something away from the all-time high, which is 20,000. Who knows? We might see it reached any day now. Any day. Maybe by tomorrow, we're going to see the all-time high reached again. Quick look at Ethereum Futures, which, as things stand right now, are currently trading at $581.88. Again, just like Bitcoin, they had a few, let's say, mellow trading sessions. Yeah, Ethereum lost a bit in the last few trading sessions, but the good news is that it settled above that 50 moving average at 578. Yeah, currently it's trading at 581. We see that 50 MA at 578. It's a good sign. From here on, two things might happen. One, we might see a retest at 572.39 to the downside, where that 200 moving average is, or just like Bitcoin, it will look to create higher highs and, who knows, pushing towards the all-time high. The stochastic at the bottom is in the oversold level, which indicates a bit of breathing space. We might see a bit of buying power. And we see the RSI, guys, not being able to come down all the way to the oversold, which usually means we might see good buying power on the market, pushing the price through the roof. Now, let's have a quick look at some trading signals, guys. Let's see what investing.com thinks about the markets half an hour into the US trading session. Right, we're looking at currency pairs, mixed sentiment on currency pairs. We see the euro and the pound with sell and strong sell positions on 5 minutes and 15 minutes charts. The daily remains a strong buy, though. USD Jpy and USD CHF, strong buy on a 5-minute chart. The daily remains a strong sell. So we might only be looking at a tiny correction. Yeah, and then the downtrend from the US dollar might continue. Let's see, a lot of mixed signals. Right, we see 4 green. Finally, we see 4 green on the euro versus the British pound. Let me sniper these pop-ups. There we go. 1 bullet, 2 pop-ups. This is how good I am. So, Euro GBP, 4 green, 4 strong buy, which might give us a bit of hope. The signals are turning around as we speak, guys. We're looking at the Kiwi dollar versus the US dollar, 4 green, 4 strong buy positions on the Kiwi dollar. The USD CHF just turned around into 4 red, 4 strong sell positions, and the Euro USD turned into a strong buy. So the US dollar might drop again another day, another trading session in front of the European currencies. Now let's have a quick look at commodities, guys. See what is going on with commodities. Maybe we see a bit more green on the charts. There we go. Let me sniper these pop-ups. There we go. Now we're looking at gold and silver with a bit of green. Silver has quite a bit more green than gold. 4 green on silver, 4 buy positions. Gold is still stalling. 1 buy on a 5-minute chart and a strong buy on a 15 minutes. The daily and the hourly remain neutral. We're looking at copper futures now with the 3 strong sell positions, and the daily still remains a strong buy. We're looking at crude oil, WTI, and Brent oil with 2 red, even though the daily remains a strong buy. So again, at least as things stand right now, we might see crude oil futures trading lower, guys. We might see a retest of that 200 MA. Who knows? Maybe even lower. The good news is that it still remains a strong buy on the daily chart. Now, careful with your entries. Yeah, if you want to go long on oil, if you want to follow the trend, wait for this downward movement to end, and then see where you're going to position yourself on the market to avoid a potential drawdown. Then natural gas is not even worth talking about it. Mixed signals, nothing big is going on. And then US wheat, guys, we see 3 red on US wheat, and the daily remains a strong buy. Now, quick look, one last look at US indices, guys. Let's see. What? Okay, now we're talking. We see a lot of green. There we go, guys. 4 of a kind for NASDAQ, 4 of a kind for the S&P, 4 of a kind for Dow Jones. Strong buy positions on the American indices, guys. We're looking at Russell 2000 as well, the small cap, again with 4 green, with 4 strong buy positions. DJ Transportation, strong buy. Right, and NYSE Composite, again, strong buy on all 4 timeframes. So a lot of green. We see only green on the charts on the American indices today. Right, this was it from our side today, guys. We had Neil Wilson, Chief Market Analyst at Markets.com, for a great round of market talks. In 2 hours, exactly 2 hours from now, we start the biggest open webinar series of 2020 with my first guest, with Joao Monteiro. Trading Forex is the topic today. Join us live, guys. You can watch us live on Facebook, YouTube, and Twitch TV. All you have to do is be there in exactly 2 hours from now and click that like button if you like what you see, obviously. This is it from my side, guys. I'll see you in exactly 2 hours with the grand opening of the biggest webinar series of 2020 organized by InstructFX. Until then, remember to trade responsibly and may all your trades be in the money.